Welcome back. We are now continuing with our business cycle. We are still on the business cycles. We had just completed the government policies, which is the monetary and the fiscal policy. We are now going to the new economic paradigm in smoothing the business cycle. So this is an essay type question. In this essay type question, you are expected to discuss in detail the new economic paradigm, explain the smoothing of the business cycles. So here you explain the demand side policies as well as the supply side policies. Let us look at the demand side policies. Now we say the demand side policies are the policies that are implemented in order to control aggregate demand. Now, you need, like we spoke about the fiscal policy and the monetary policy previously. We are still talking about the fiscal and the monetary policy as the two policies that form part of the demand side policies. And under these demand side policies, you are expected to clearly explain how the monetary and the fiscal policies can be used in smoothing out business cycles. Now, this will depend on where the economy is. Like I said, during the contractionary phase of the business cycle, the expansionary policies will be used in order to stimulate the economy. On the other hand, during the contractionary phase, during the expansionary phase, when the economy is overheated, the contractionary policies will be used in order to dampen the economy. Now we look at the demand side policies and we say these are the policies, like I said, that are there in order to control aggregate demand. So what happens is when the economy is overheated, the contractionary fiscal policy and the contractionary monetary policy will be used. The government will decide to reduce government spending if the economy is overheated in order to control the aggregate demand, because when aggregate demand is too high, it might also lead to inflation. So in order to control that, the government will then use contractionary monetary policy as well as contractionary fiscal policy in order to reduce aggregate demand. On the other hand, when the economy is going through a contractionary phase or is at the peak, the government will have to use the expansionary monetary policy as well as the expansionary fiscal policy in order to stimulate aggregate demand. Now, let us focus on the monetary policy and look at the interest rates again. We say when the economy is overheated, the government will then increase interest rates. When the Reserve Bank will increase interest rates, and when interest rates are increasing, then it means access to credit becomes expensive. That will discourage people from taking loans and increasing aggregate demand. On the other hand, the government can increase taxes so that the people's disposable income can decrease, and that will result in them demanding fewer goods. Now, when we talk about this, we relate to inflation and unemployment. There's a there's a relationship between unemployment and inflation. What happens is it's a negative relationship. When inflation increases, when unemployment increases, it means more people are not working. Inflation will decrease because the demand for goods and services will be decreasing. So this relationship is shown by means of the Phillips curve. this is how the Phillips curve looks like. According to this curve, we see PC and PC1. And let us focus on PC. When unemployment is 14%, it means more people are unemployed. So an inflation rate is at 0, which means the more people are unemployed, the lower the demand for goods, and the prices of goods will not increase. But immediately unemployment decreases, more people getting jobs, then we see inflation now moving from 0 to 2%. This means that when people get jobs, they start demanding more goods and services, and the demand for goods and services increases, and that pushes the prices up. And as unemployment continued to decrease to 8%, the inflation rate continued to rise. When unemployment decreases to 8%, we see inflation rising from 2% to 6%. So that is how we explain the relationship between unemployment and inflation rate. We say when unemployment decreases, the inflation rate increases. And when unemployment increases, the inflation rate decreases. Now, what happens is the government can create more. When they create more jobs, they must ensure that they come up with other policies that will also control the inflation rate, so that inflation rate does not increase that much as unemployment increases. So this relationship, we explain it by means of the Phillips curve. So this curve that we are looking at right now, we call it the Phillips curve. It is the curve that we use in order to explain this relationship between unemployment and inflation. So through the Phillips curve, we are able to deduce that whenever unemployment rate decreases, inflation rate increases, because a decrease in unemployment means more people are working and there is more income available to spend. Then there's now more money chasing few goods. So that results into inflation. So the Phillips curve is that curve that we use in order to explain the relationship between inflation and unemployment. Now, looking at the supply side policies. Supply side policies are used in order to control the aggregate supply in the economy. Now, this essay may come as an explanation of the demand side policies, or explanation of the supply side policies, or the two policies combined. So when we look at the supply side policies, we look, among other things, at reducing the production costs. When the production costs are reduced, then it means the suppliers are able to supply more. Then the economy is stimulated, and more production takes place as a result of reduction of costs. Now we look at also the improvement in the efficiency of inputs. Efficiency of inputs relates to, inputs are those things that we use in the production process. So if our inputs are efficient, then it means businesses are able to produce more, so production will increase. Efficiency of markets relates to regulations that regulates the market, competition laws, and all those things. They form part of the efficiency of markets. So under this topic of the economic paradigm, your discussion is based on the demand side policies as well as the supply side policies. But sometimes the question may appear as explain how the monetary policy and the fiscal policies can be used in order to smooth out the business cycle, or discuss the economic paradigm and how it can be used to smooth out business cycles. So this is one essay under the business cycle. Now let's look at the features underpinning. Now when you go through your examination guideline, for you to be able to identify the questions that form part of the essay, all those questions that say discuss in detail, those are our possible essay questions. So the second one that we have now is the features underpinning forecasting. Discuss in details the features that underpin forecasting. We look at the indicators, we look at the length of the cycle, we look at the amplitude, trend line, extrapolation, and moving averages. So on this essay, it's important that you know all these features, because sometimes it is asked as discussing the indicators as features underpinning forecasting, or discuss the features underpinning forecasting excluding the indicators. So you'd find that most of the time learners will just focus on the indicators and not focusing on these other features. So it is important that you study all the features that underpin forecasting for you to be able to approach this question in whichever way it comes. So that is that under the business cycles. And then we go to the public sector, and then we'll then finish off with the foreign exchange market. Now, under the public sector, we look at the composition and the necessity of the public sector. Now, under the necessity and the composition of the public sector, that is where now you need to study be able to explain the necessity of the public sector, which is to supply public goods, to conserve the resources, and to manage the economy. These are the things that the public sector mainly does. So this is why the public sector is necessary. Problems for public sector provisioning. This used to be an essay type question, but it is no longer an essay type, but it can appear as an additional part of your essay or your 2.5. Now, under the problems of public sector provisioning, this is where we discuss how each of the following factors contribute to poor public sector provisioning. How does accountability result to poor public sector provisioning? Lack of accountability will definitely contribute to poor public sector provisioning. Now we look at the efficiency, assessing needs, pricing policy, parastatals, and privatization as well as nationalization. So this type of questions are the questions that you can expect as your 2.5, 3.5, and so on. It's high order, but no longer an essay. Objectives of the public sector. This is an essay under the public sector, whereby you need to know all these objectives of the public sector and be able to evaluate the success of the government in terms of achieving these objectives. Now, the objectives of the public sector involves economic growth, full employment, exchange rate stability or balance of payment equilibrium, price stability, as well as economic equity. So prepare this topic thoroughly as an essay type question. And then under the budgets, we look at a broad outline of various budgets. Broad outline means you must just know the different kinds of budgets, the national budget, the provincial budget, and the local budget. Emphasize the public debts as a percentage of GDP. You can expect a data response question here, whereby you are given information to look at how much the GDP is as compared to the public debt in the budget. Analysis of the main budget data relating to taxes, sources of income, expenditure allocation, personal income tax. Let's see if we have here an activity that is related to this one. Here we have an activity that is based on the budget, 2020-2021 budget. So it means from that part of the topic, you can expect a data response type of question. Let us look at this one. It says it is based on the national budget revenue. It's mainly on the revenue, which is tax revenue from personal income tax, corporate tax, and value-added tax. Now, the question is, identify the fiscal instrument shown in the above table. Which instrument is used in this table? According to the table above, how much is contributed by companies to the government revenue? So this kind of question, you can easily pick up from the data response, and we no longer have many questions whereby you can just go to the data response and find the answer. Describe the term national budget. Calculate the value of A in the table above, meaning you have to calculate the tax revenue, the total tax revenue in this data response. How does the public sector failure affect the tax system in the country? Now let us look at the responses. Now the data response, the fiscal instrument that was used in that table is taxation. And according to the table, 230 billion was contributed by companies as government revenue. Now we have to move back and forth. Now let us look at the table. Corporate tax, this is the tax that is contributed by businesses. Now it's 230.2 billion. Describe the term national budget. Now, national budget is a statement of government's planned expenditure and anticipated income for the fiscal year. So when we talk about the budget, we talk about a plan, what the government anticipates to receive and how they plan to spend it. So that is what the national budget is all about. Calculating the value of A, we add value-added tax plus corporate income tax, as well as personal income tax. So the total tax revenue will be a sum of all this tax revenue that the government collected, which is personal income tax of 546.8 billion, corporate income tax 230.2 billion, value-added tax 360 billion. So under the topic of budget, these are the kind of questions that one can expect, mainly on the data response or on the 1.3, where you have to give a description. You are given a description and you have to give the concept that is related to that description. How does the public sector failure affect the tax system of the country? 1, by leading on an increase in the tax rate paid by the state-owned enterprises. 2, by discouraging most taxpayers from contributing their taxes due to misappropriation of funds by the government officials. These are the things that can cause the public sector failure. This is how the public sector failure can affect the tax system of the country. The first one says leading an increase in the tax rate paid by the state-owned enterprise. Now, in other words, if the state-owned enterprise, they don't pay tax as they are supposed to, then it's going to lead to public sector failure because they will not government will not be able to collect as much tax as it's supposed to collect. Discouraging most taxpayers from contributing their taxes due to misappropriation of funds by the government officials. If more people are evading tax, the government will not have enough revenue to cover its costs, and that is going to lead to public sector failure because they will not be able to provide public goods and services the way they are supposed to. Shrinking the tax revenue collected by government as it results to tax evasion. If the tax evasion will actually lead to shrinkage in the tax revenue, because if evasion means people are not paying tax that they are supposed to pay, so that will affect the provision of goods and services and lead to public sector failure. Now, the fiscal policy, including the Laffer curve. The Laffer curve is that curve that shows the relationship between the tax revenue and the tax revenue as well as government revenue. It shows the relationship between the tax and the revenue of the government. In other words, if the tax rate is low, the revenue that the government receives from taxes is going to be low. Now, under the fiscal policy, we look at the discussion of the following: the main variables, which is tax and government expenditure; the features of the fiscal policy, which are goal-bound and demand-based, and they are cyclical. Now, under this, we discuss the effects of the fiscal policy on income distribution, consumption, the price level, the incentives, and the incentives in relation to the Laffer curve. Now, you are also expected to draw and interpret the Laffer curve. Like I said, the Laffer curve is that curve that shows the relationship between tax and tax revenue. If people are not paying tax, then the government does not receive any revenue, because the government's main revenue comes from taxation. So on the Laffer curve, it explains that if the tax revenue is zero, the government receives nothing. When the tax rate increases, the tax revenue also increases, up to a point where it reaches a maximum. Now, what happens is, if the tax rate is too high, there's going to be a lot of evasion, and the government, as a result, is going to lose tax revenue as a result of that. So the Laffer curve it shows that when the tax rate is zero, the revenue is zero as well. And as the tax rate increases, the revenue of the government from taxes also increases, but it increases up to the point whereby the tax rate, when it's now at its maximum, people start evading tax, they start being discouraged to work, and the tax revenue will then decrease because a lot of people are no longer working and others are evading tax. So you need to understand that relationship between the tax revenue and the tax rate, which is represented by the Laffer curve. Public sector failure. Under the public sector failure, there is an essay also there, which is the discussion of the reasons for public sector failure. Now, it says you must be able to link these reasons to the problems experienced through public sector provisioning, which means as you discuss these reasons for public sector failure, an additional part thereof can be based on public sector provisioning. Now, the reasons why for public sector failure are management failure, empathy, motivation, lack of motivation, bureaucracy, political instabilities, structural weaknesses, special interest groups. So with the essay, remember we said this is where you have to discuss in detail and always write in full sentences. So under the public sector, this is our second essay, the discussion of the reasons for public sector failure, and we relate them to problems of public sector provisioning. Now, the other part is explanation of the effects of the public sector failure, which is allocation of resources, economic instability, distribution of income, and social instability. Now it says, in all of this, as you are discussing, you need to enforce where appropriate the national macroeconomic policy and the service delivery with regard to socio-economic rights, which this is where now you are, this is not the information that you'll get from the book. This is the information where you need to apply your knowledge, evaluate the situation, and assess public sector provisioning and the problems that result into public sector failure, the reasons that causes public sector failure. So with public sector, more than just what is in the book, it is important for you learners to evaluate the situation around you and be able to give your value judgment on whether the public sector is succeeding or failing in carrying out its objectives and providing quality goods and services to the public. And we are experiencing a lot of protests these days, so you need to be on board with the current economic issues. As you study the public sector, be able to assess whatever is going on around you and make your value judgment, be able to answer high order questions that are based on the public sector and its success in providing the public goods as it is supposed to. Now, going back to the public sector, I just want to highlight the two essays that you need to look at. We said the first one is the objectives of the public sector, which are economic growth, full employment, exchange rate stability or balance of payment equilibrium, price stability, and economic growth. And here we had this essay in the March test, and the additional part thereof was for you to assess the success or the failure of the government in terms of achieving these objectives. And many learners were just explaining further these objectives. Some were explaining the poor public sector provisioning as part of the additional part, whereas the question was for you to assess if those objectives have been achieved. So it is important that you read your questions, because some of the responses, they gave an indication that there is content knowledge, but the application is where we have a problem. We have a problem in terms of applying the knowledge that you have. So when you prepare these essays, be on board with the current economic issues that are happening around us. So that is that with the public sector. You look at the objectives of the public sector as well as the reason for public sector failure. Now, our last topic is foreign exchange markets. Now, with the foreign exchange markets, we look at the first topic is an essay type question. Like I said, in the past, we did not have an essay in chapter 4 of foreign exchange markets. So you are likely not to get any essay, any revision activity based on the essay on this topic. However, we expect you to be able to discuss this international trade reasons. In the past, this kind of a question used to be an 8-mark question, but now it has changed. It is now 40 marks, which means all these reasons you need to know both the supply side and the demand side reasons. Now we look at, when discussing the reasons for international trade, we look at the size of the population, the income goals, the change in the wealth of the population, the preferences and tastes, the differences in the consumption patterns, absolute and comparative advantages, natural resources, climatic conditions, labor resources, technological resources, specialization, and capital. Now, with this one, these are the reasons that causes countries to trade with one another. For example, when we look at the size of the population, as the population increases, more demand for goods increases. So people tend to want to buy goods which are not available in the country. Hence, it becomes a reason for international trade. Income levels. As people earn higher income, they tend to want goods that are imported. Hence, they cause the high income levels results into increase in international trade. Because when people get higher income, they want to buy things that are important, that are imported, and they want to visit other countries. So that is how international trade comes in. Change in the wealth of the population. This one is related to the income levels. The more wealthy people are, the more they want exclusive goods. So sometimes you would find that those goods that they want are not available in the country. So as a result, they have to get them from other countries. Preferences and tastes can also result into international trade, whereby people's preferences are on goods that are not available in the country. So they tend to buy them from other countries. So all these factors are factors that result into international trade. Now let us look at the supply reasons. The natural resources. We know that natural resources are unevenly distributed and different countries have different resources. So that makes it necessary for businesses to buy natural resources from other countries to produce goods that they want to produce if those natural resources are not available in their countries. Climatic conditions are also one of the factors that causes, is one of the supply reasons for international trade. Now, because of the climatic conditions, certain crops we cannot plant under certain climatic conditions. So as a result, we have to buy those goods from other countries. And other countries do not have the same climatic conditions as us as South Africa, and then as a result, they have to buy goods from us. For example, South Africa is rich with production of grape, so they have more supply of grapes and wine, and because other countries cannot, their climatic conditions do not allow for them to plant grapes, then they get to buy wine and grapes from us. Labor resources. Different countries have got different skills. So as a result, there is exchange of labor between countries. So that causes international trade. Technological resources. Other countries are more advanced than others, and they have more advanced technology, and they have appliances that are of advanced quality. So that also makes it necessary for countries to trade with one another. And then specialization, because countries have got different labor resources, they have different climatic conditions, they tend to specialize. So a country that specializes means it doesn't produce everything, it is not self-sufficient. So those goods that they are not produced within that country, then the country will then buy from other countries. Capital, the tools that are used in the production process to produce other goods. Like we talked about the technological resources, other countries will have more advanced capital goods, so they sell to those countries that do not have. So these are the reasons for international trade. So because this is a new essay, you need to go and really study it and get used to it, because like I said, there are no much reference to this essay. We don't have many question papers. The question papers from 2017 to 2020, there is no question paper that has the main reasons for international trade as an essay question. And then the balance of payments. Still under the reasons for international trade, we have the effects of international trade. It's a brief discussion, which means you can expect this in your 8 marks question, where you have to discuss the effects of international trade on specialization, on mass production, on efficiency and globalization. How international trade results into specialization. So because we said with specialization, countries specializes with producing goods that they can produce at a lower cost, or they are able to produce more than other countries. So in such cases, then international trade will then cause countries to specialize, because they can focus on what they produce better and then buy from other countries. And then in terms of mass production, we say international trade causes mass production because now businesses have to produce for their local consumption. They also have to produce for export purposes. So that causes that results into mass production. Efficiency. With international trade, there's international competition. So if there's international competition, it means other countries can produce the same goods that South Africa is producing more efficiently. So for South Africa to be able to compete with those other countries, it means that we must be efficient in our production. And then finally, globalization. And then we look at the balance of payments. Now, the balance of payments, like I said, with all the topics, it is important to understand the concepts. What the balance of payment is, what is the purpose of the balance of payment, how is the balance of payment compositioned, what does the balance of payment, what are the accounts that makes the balance of payment. Now, let us look at the composition of the balance of payments. Balance of payments, we look at the 3 accounts: the current account, the capital transfer account, and the financial account. So these are the 3 accounts that we look at when we study the balance of payments. So what is important here is for you to know the components of each of these accounts and how we calculate the balance. Now, with the current account, we look at the gold exports, the goods exports, the exports of tangible goods. In other books, they call it merchandise exports. And then it involves the net gold exports, the service receipts, which is income that we receive from services that we rendered to other countries, income receipts, and then remember, in the balance of payment, we look at it's a summary of transactions that the country has with the rest of the world. So balance of payment involves exporting and importing. Now, in the balance of payment, if our exports are more than our imports, then it means there is inflow of money in the country. And then the balance of payment will have either a positive balance or a surplus. But on the other hand, if our imports are more than our exports, it means there is more outflow of money and our balance of payment will have a deficit, which is a negative balance. Now, we have the current account, which comprises of goods exports, net gold exports, service receipts, income receipts, merchandise imports, payment for services, income payments, and then we have the current transfers. And then we have the capital transfer account. And then in the capital transfer account, we say the net lending to the rest of the world is always added, whereas the borrowing from the rest of the world is subtracted. This is because borrowing from other countries, when we borrow money from other countries, is going to cause a leakage because we have to go to pay the money back with interest. But when we lend money to other countries, then it's positive towards our balance of payments because we are going to receive money with interest. And then the financial account is based on the investments, which is the net direct investment, the net portfolio investment, the net financial derivatives, the net other investments, and the reserve assets, the special drawing rights allowances. Now, with this question, most of the time you would find a data response kind of question, whereby you are given the components and you have to identify the type of account which those components form part of. Now let us look at this activity. This is our balance of payment. Now, it is important that when you come across an activity such as this one, you know the components. Or when we talk about merchandise exports, which account includes the merchandise exports, the net gold exports, and so on, so that you are able to answer any information that is based on that data that you will be provided with. Now on this one, the first question is for you to identify the account that is presented in the data above. Which account does this data relate to? Is it the current account, the financial account, or which account is this? And then the second question is, which item records transactions relating to donation and gifts to other countries? And then briefly describe the term capital transfer account as part of the balance of payment. What may cause a decline in the net gold exports? And then lastly, calculate the trade balance. Now, with the calculation of the trade balance, it is important that you know which aspects, or you cannot use all these amounts and then just assume that the marker will just choose the correct one. It is important that you choose the items that are to be used in the trade balance. Otherwise, you're going to lose marks because of writing all the other amounts that are irrelevant. Now let us look at the responses. Now here are our responses. The data response is based on the balance of payment, and the account that is depicted there is the current account. And then the second question was, which item records transactions relating to donation and gifts to other countries? That is our current transfers. Now the description of the capital transfer account, it records the net amount that includes transactions and grants relating to ownership of fixed assets, debt forgiveness, and the value of households and personal effects, and the financial claims and liabilities to immigrants. Now, what may cause a decline in the net gold exports? South Africa's main exports are based on gold. And what could be the cause for the net gold exports to decrease? Among other things, there could be less reliance on gold as a value stabilizing commodity. In other words, the net gold exports can decline because South Africa is no longer relying on the export of gold. And then the other reason could be the worldwide recession that led to low gold price. Now, if other countries are having a recession and they are not able to buy as much gold as we used to sell, those countries are no longer buying as much gold as they used to buy, then it means our net gold exports is going to decrease because we will no longer be selling as much gold. And then the other thing that could lead to net gold exports declining is closing down of gold shafts that led to downscaling of gold production. So if more mines are closing down, then it means the production of gold will no longer be the same. Now let us look at calculating the trade balance. When we calculate the trade balance, we focus on the tangible goods. Now, like I said, it is important to know the components that you have to use when calculating the trade balance, so that you don't just include all other amounts that are in the balance of payments account. You don't include all the accounts that are in the current account. Now, when we calculate the trade balance, we look at the merchandise exports and we add the net gold exports, because these two represent an inflow of money into the country. And then we subtract merchandise imports, because merchandise imports results into the outflow of money out of the country. So according to our data response, our merchandise exports is 311,383. And then we add our net gold exports, which is 12,479, and we subtract our merchandise imports, which is 319,698, and the answer thereof becomes 4,000. It's a negative 4,174, not 7 here. There's an error here. The correct answer there is 4,164. And it becomes a negative balance because now our merchandise imports are more than our merchandise exports together with our net gold exports. So our trade balance is negative. And a data response question can also come from the financial account. So I only made an example of the current account in this regard. Now, it is important that our balance of payments is at an equilibrium. Our balance of payment is at an equilibrium when our imports are equals to our exports. When the exports are more than the imports, we have a surplus in the balance of payments. When imports are more than exports, on the other hand, we have a surplus, we have a deficit, because there's more money flowing out than money coming into the country. Now, in order to correct the disequilibria, the disequilibria emanates from more surplus or more deficit. If there is more imports, there's a deficit. If there is more exports, there's a surplus. Now, correcting the balance of payments, these are the measures that can be done. We look at the interest rates. We regulate the interest rates, increase them when it is necessary, and reduce them whenever it's necessary. No, so these are the things that we use in order to correct the balance of payments disequilibrium. And this kind of a question you can expect in your high order questions, the 2.5, 3.5, 4.5. Now, when the country uses these measures in order to correct the balance of payment disequilibrium, it means maybe the question can appear as, how can the balance of payments disequilibrium be corrected? What measures can be used in order to correct the balance of payment disequilibrium? Then you have to explain that the interest rates, what will happen to the interest rates in order to correct the balance of payment disequilibrium, how are import controls going to be used in order to control, in order to reduce to correct the equilibria, the disequilibria, and how borrowing and lending can also be used to ensure that there's an equilibrium in the balance of payment, how change in demand can be influenced in order to ensure that there is neither a deficit or a surplus. Export promotion and import substitution, these are the trade policies that we use in order to control how much we import and how much we export. The exchange rate also has got an influence on how much will be imported and how much will be exported. For example, if our rand is weak, then it means our exports become cheaper and the imports become expensive. As a result, there will be more exports and lesser imports, because now exports are cheaper and imports are more expensive. Now, looking at the foreign exchange markets, we have different kinds of exchange rates, which is the fixed exchange rate, the managed exchange rate, the managed floating. So you need to know the descriptions of those three exchange rates. Need to know the difference between appreciation of the currency as well as depreciation of the currency. You need to know what is meant by devaluation as well as revaluation. Remember, with the free floating exchange rate, there is no control by the government. The market forces determine how much the exchange rate will be. Now, what happens is the value of the rand will either appreciate or depreciate depending on what is happening in the market. But when we look at the managed floating exchange rate, the government has got the authority to either devaluate the rand or revaluate the rand, the value of the currency. Now, with revaluation, it is when now the government intentionally increases the value of the currency. But with the devaluation is when now the government, with intention, they reduce the value of the currency in order to influence the number of imports or exports that are going out of the country. So these four concepts are related to the value of the currency, but they are relevant to different kinds of exchange rates. For the fixed exchange rates, for the managed floating exchange rate, there is revaluation and devaluation. For a fixed exchange, for a free floating exchange rate, there is appreciation and depreciation of the currency. Now, demand and supply for foreign exchange, you need to know the factors that affect demand for the currency and the factors that affect supply for the currency. In other words, it is important to know when is the currency supplied and when is the currency demanded. When is there a demand for South African rands, and when is there a supply for South African rands? When international tourists come to the country, you need to identify as to whether they cause a demand for rand or a supply for rand. So these are the factors that are important in terms of the exchange rate because they influence the value of the currency. The exchange rate equilibrium. This one is related to drawing and interpretation of graphs. And when we talk about drawing and interpretation of graphs, this is the kind of question that you can expect either in the data response or in the point 4 type of question. Is a low order when you are expected to draw the graph based on the exchange rate, then it's a 8-mark question, but not a high order for question 2.5. And then the other thing that you can expect out of this is the data response. We'll look at another activity on the exchange rates, the value of the rand and how it interacts, especially in the free floating exchange rate. And then the other thing that is important is the changes in equilibrium. When there is a shift in the demand and supply of the currency, we are going to look at these things from an activity. And then the last part is the establishment of the foreign exchange rates. Now, for example, our country uses the free floating exchange rates, which is the rates where demand and supply determines the value of the currency. In this kind of an exchange rate, we say the value of the currency will either appreciate or depreciate because the government does not determine the value of the currency. But with managed floating or fixed exchange rate, that is where there is devaluation of the currency as well as revaluation of the currency. So it is important that when studying this chapter based on the exchange rates, you know exactly the type of intervention that happens in each type of the exchange rate. Because in the free floating, there is no government intervention. The value of the currency will either appreciate or depreciate on its own, depending on demand and supply. On the other hand, with the managed floating, the value of the currency is determined by government officials, and they decide whether to revalue or to devalue the currency. And then the terms of trade. You need to know what the terms of trade means and how to calculate the terms of trade. We looked at the balance of trade in the balance of payment. Now we are talking about the terms of trade. This one is based on the index prices, the index of prices. Now the balance of trade is based on the imports and exports of tangible goods. Now let us just look at the activities that are based on the foreign exchange market. Here we have a graph that is based on the free floating exchange rate. And according to this graph, the demand, the initial demand for the rand was at this point, and this was our initial equilibrium. But there has been a drop in the demand for rand. Now, a drop in the demand for rand caused the value of the rand to move from 17 rand to 12 rand. Now, let us look at the question that is related to this graph. With reference to the graph below, explain the effects of coronavirus on the value of the rand. Now let us look at what happened to the value of the rand as a result of coronavirus. The demand for rands decreased from 100 to 80 because there was this pandemic. The demand for dollars decreased, the demand for rands decreased. Like we said, the initial equilibrium was at this point where demand was 100 at the price of 70. Now the demand moved from 100 to 80. Now this shift in the demand causes the value of the currency to depreciate. The price in terms of the dollar decreased from 17 rand per dollar to 12 rand per dollar. Therefore, the rand appreciated. Now, with reference to the exchange rate, when the rand moves from being a rand being 17 rand to a rand being 12 rand, it means the value of our currency has appreciated, because an item that we used to buy for 17 rand, we are now buying for 12 rand. So as a result of this COVID-19, the value of the rand decreased, appreciated from 17 rand to 12 rand. Now, in terms of the value of the rand, it doesn't operate the same way as the normal demand and supply. When the rand changes from being 17 rand per dollar to becoming 12 rand per dollar, it means the value of our currency has appreciated, because the same goods that we used to buy for 17 rand, we are now buying for 12 rands. So what happened in this graph is that the demand decreased from 100 to 80, causing the value of the rand to appreciate from 1 rand being equal to $1 being equal to 17 rand to $1 becoming 12 rands. So this is what happens in the free floating exchange rate. The value of the currency is determined mainly by the interaction between demand and supply. And when the demand shifts, it then affects the value of the rand, depending on whether it shifts to the left or it shifts to the right. And whenever the price of rand to a dollar moves downwards, then the value of the currency has actually appreciated. This is because we are no longer paying 17 rand for a dollar, we are now paying 12 rands. Now let us look at the other facts. Now, due to the appreciation of the rand, exports will decrease and imports will increase. This is because when the value of the rand appreciates, exports become expensive. On the other hand, imports become cheaper. Hence, now the appreciation of the rand causes the exports to decrease because now exports are expensive. And imports will now increase because it's cheaper to buy from other countries with a stronger rand. On the other hand, it will have a negative effect on the balance of payments because in the balance of payments, whenever our imports become more than the exports, then it means the money flowing out is exceeding the money coming in. So as a result, our balance of payment become negative. And then the other thing is that South Africa will pay more on loan repayments and will also the payments for services which create a large deficit in the current account of the balance of payments. So we have already explained why the current account will be unfavorable when the rand appreciates. So that is what happens to the currency when, as a result of, this is what happened to our currency as a result of the COVID-19. Now looking at the difference between valuation and appreciation, we said devaluation is done by the government in order to reduce the value of the rand. On the other hand, appreciation is resulting from interaction between demand and supply of the currency. Now let us look at the differences. Now here is the difference between the devaluation and appreciation of the currency. It says devaluation. With devaluation, a decrease in the value of the currency is done by authorities, whereas with appreciation, an increase in the value of the currency is due to market forces of demand and supply. Now, revaluation refers to a fixed exchange rate system, whereas appreciation is typical for a free-floating exchange rate system, because with a free-floating exchange rate system, demand and supply are the ones that determine the value of the currency. Now, with devaluation, the government may devalue the currency to improve exports. And then the government can change the rate to any rate that they want. But in terms of appreciation of the currency, the government has got absolutely no control over the value of the currency. Yeah, this is how the exchange rates are established. And we have come to the end of our presentation. And in closing, I just want to say 2021 is not a year like other years, especially for you, the class of matric of 2021, because last year you did not have much time. You were not at school most of the time. So now that you are in grade 12, you need to cover up and make sure that you cover for the lost time. Go and work and get ready for your June exam. We know June exam is not going to be part of the SBA, but you need it as a practice activity so that you are able to know how much fit you are for the exam, so that you don't only see the exam during the trial exam. So I wish you all the best, and please go and prepare. And remember, I said for this paper one, you must only go and focus on the macroeconomics. Protectionism and free trade has moved from macroeconomics to economic pursuits. So in as much as you are going to do it in this term, it's not going to be part of the June exam. The June exam paper one will only be focused on macroeconomics topics. I hope this presentation will add value in your studies and preparation for the exam. Thank you.